Good morning and welcome to our Coffee and Crypto series. We are so happy that you are joining us today. Before we get started, or before we start the conversation, I would like to introduce Dr. Jimmy Lenz and Lee Reiners, who will be your hosts for today. And I do have some brief bios to share about each of the speakers. And I will start with Jimmy Lenz. Why don't you go ahead and give our viewers a brief introduction of yourself, and then I'll have Lee do the same.
Sure. Thank you, Bridget, and good morning. So here I am. This is my bio. I'm Jimmy Lenz. I direct the Master of Engineering in Financial Technology and the Master of Engineering in Cybersecurity here at Duke University. I have about actually more than 2 decades of experience in finance, primarily in the kind of the algorithmic trading and quantitative trading realms, but also as Chief Risk Officer for one of the major brokerage firms and Chief Credit Officer and Head of Predictive Analytics. So a little bit of industry experience too, and have been involved in cryptocurrency and blockchain for probably about 7 or 8 years. I've been teaching courses in it for about 5. And I'll throw it over to Lee.
Oh, Lee, you're muted.
I caught myself, yeah. Well, good morning, everyone, or good afternoon or good evening, depending on if you're watching this on YouTube. So my name is Lee Reiners. I'm the Executive Director of the Global Financial Markets Center at Duke Law. Our center focuses on the intersection of finance, law, and public policy. Of course, cryptocurrency and FinTech is a big part of what we do and what I teach. So for the last 4 years, I have taught FinTech law and policy. And so one of the modules in that course is dedicated exclusively to all things crypto assets. In addition, I have a course by the same title available on Coursera. So anyone who's watching can audit that course for free. If you're a Duke student or a faculty member, you can enroll in the course for free and get the certificate. And Jimmy, I know, has got a series of courses now on Coursera as well. And so, yeah, I mean, I've really been focused on the evolving legal and regulatory and sort of broader financial policy evolution when it comes to crypto assets. It's been a fascinating ride, as Jimmy and I have talked about in the past in that regard. I'm sure it will continue to be going forward.
Yeah, it's funny you bring that up, the kind of that side of it, Lee, the more the policy side, because we're seeing more and more come out of policy. And that's I kind of wanted to ask you a little bit about your thoughts. You know, there was the big announcement last week out of China that 6 of the state-owned banks were kind of progressing down the track of a central bank digital currency. And so much so that, some of the railway stations had been enabled for new payments via, a digital currency, a central bank digital currency, ATMs and things like that, some of the point of sale terminals. How do you see that playing out, both, on a China and then more of a global and US basis?
Yeah, I mean, it's really fascinating stuff. One, I would say that I don't view this as a race, and I know obviously tensions with China have been ratcheted up here over the last several years. Of course, there are clear points of disagreement between the two countries, but if you're sort of caught up in that framework, I wouldn't be too concerned that oh my God, China has a central bank digital currency, we need to do this. As I've said before, the goal is not to have a central bank digital currency, right? The goal is to have a better, faster, more efficient, more inclusive payment system. And if a central bank digital currency gets you there, then that's great. But it doesn't mean that is the sole solution to that problem. In the US, we do have an antiquated payment system that is in need of an urgent uplift. The Federal Reserve is working on that. They have a program called FedNow, which would essentially sort of increase the speed and efficiency of existing interbank settlement processes. But the CBDC in China is like I said, it's fascinating. There's still a lot we don't know. One point that you raised, Jimmy, is that it is administered through the banking system, and that's sort of one of the concerns that when you talk about a CBDC is, well, what role would there be for the banks? Because when you think about what it is at its core, and this is another one of those classic sort of crypto terms that is not well defined or sort of universally defined, but you're talking about a direct liability of the central bank, is how I would interpret a CBDC in digital form.
Right.
So right now, in the U.S., we can have direct liabilities in the central bank in the form of physical notes. I think I might have my wallet around here somewhere. People still use hard currency, but for most of us, when we think about money, we think about money we have in our bank accounts. My Bank of America account or your JP Morgan account. And that money is technically a liability of the bank, right? That is holding your deposits. It's not a liability of the central bank. And so the concern then becomes, well, if everyone can get access to central bank money, digital money, why would they ever deposit it at a bank? Because clearly the central bank is a better credit risk than Bank of America. Right, the central bank is not going to fail. If it does fail, we have bigger problems going. Yeah. So it's interesting that China is choosing to administer their digital yuan through the banking system, because it does then allow for the banks to continue to play a role in intermediation in the payment system. And I would suspect that would be something that the U.S. would, if they were to consider a CBDC, would also would want to do as well. So, I don't know in terms of long-term implications. I'm curious to get your thoughts on this, Jimmy. People, and I don't think a lot of people realize this, but payments in China is just totally different than it is here. And so China is controlled by essentially two. It's a duopoly. It's Alipay and WeChat Pay. So Alipay is owned by Ant Financial. It spun out of Alibaba. They were supposed to do an IPO back in November. That got scuttled for a variety of reasons that you can read about. Jack Ma, apparently wasn't visible for a while. And then WeChat Pay is part of WeChat, which is sort of like Facebook, Google, Amazon, all into one service over there, and it's all QR code based. So you have an app on your phone, you go to a merchant, the merchant doesn't need to have an internet connection. All they need to do is have their own QR code. And then you just, put your phone up to it. There's stories that even beggars on the streets will have a little QR code, hanging around their neck. If you want to give money, you can do it that way. And so they bypass the whole card-based system that we have here in the US. And I think it's served them well, but it's also led to some systemic risk concerns that the government, has expressed recently. And I think this digital yuan is actually another way to sort of counteract the power that these two companies have accumulated. But
it is interesting. No, I agree with you. I think it is interesting. I think that the fact these are state-owned banks it's a different sort of structure than we have in the US. So policy obviously can be rolled out in a little bit different way. The other thing that to me is interesting is I haven't seen the backbone of this yet. Obviously, there's China has its own country blockchain, which is I believe it's a structured very similar to permissioned or hyperledger type of structure. It's not completely open, but it is used throughout the country, or it's distributed throughout the country. And so they have a couple of things that are just different. I don't know if they're going to be better or worse. It's only time will tell. But they are different, very core differences, I think. And one of the things I think that hampers things here in the U.S. is we don't have that. What we're seeing, like you said, that the Fed certainly has a big project around being able to improve the payment system that we have now, speed and things like that. But it still goes down on a fairly regular basis. And when it goes down, it stops all payments. I mean, we had it happen, just 2 or 3 weeks ago. It went down for, it goes down for, usually for hours at a time, sometimes a day. But I mean, this is, that's to me something that if you had a blockchain type of situation, obviously it would never go down. right? If depending on how it was run. And to me, those are huge advantages. Do we try to restructure an old antiquated system, or do we go with something brand new, a new tact on things? And I'm more of a let's try something on a new tact rather than continuing to try to improve this, this old antiquated system, which seems to be what the general thought is here in the States.
Yeah, that's right. And I think this is maybe where you and I differ, because I'm much more of a policy incrementalist in approach. And so I'm supportive of the Fed now effort. I think it needs to be certainly sped up. And I think there are steps they can do in the interim to improve, FedWire primarily, simply by just having it operate 24/7, which is which is one simple way to make it better. But yeah. Listen, if you're going to go down the CBDC route, there are a whole host of, and I'll leave the tech side to you, Jimmy, but there are a whole host of sort of policy considerations that need to be considered. And I think the Fed, frankly, is probably hesitant to sort of wade into this without some type of congressional mandate. So for instance, if it's a blockchain-based CBDC, who runs the blockchain, who can be a node, what type of privacy is available. In the U.S., our population cares more about privacy than they do in China. It's just a cultural difference, and so we might not be too thrilled about the government having access to our payments information. Now, of course, there are ways to design the token and the blockchain so that it doesn't reveal too much, but nonetheless, we have a historical distrust in government. So that's one concern, and that's why in the U.S., cash is still widely used relative to most other developed countries for that reason. I mean, I remember until the day she passed a few years ago, my grandma would always send out $100 bill in the mail for your birthday. And I know a lot of grandmas are like that all around the country. So, that's just one issue. Second is, does it need to be token or account based? So you can think of one model, if you operate under the the definition that I gave earlier, that this is just a digital liability of the central bank. Well, why not just have the central bank sort of operate accounts that everyone has access to, just like you can get an account at Bank of America? There's no reason that it has to be on the blockchain. It has to be token based, which token based is essentially a bearer instrument like Bitcoin. Once right. you don't need to verify the identity of the sender. It's the instrument itself is valid. So that's another thing that needs to be discussed. And then of course the issues around what's the role for the banks here. There's monetary policy considerations. Should it be negative? Can it bear negative interest rates? So, I think for those reasons, Jimmy, I think that's why the Fed is probably hesitant to get too far out front without there being some type of sort of, bigger coordinated policy discussion that really needs to come from Congress. But of course, we have a Congress that is very polarized and distracted. I mean, I think this is one of those things. There is bipartisan consensus around.
And honestly, Congress is not made up of a lot of scientists. In fact, I think there's one. I think there are no engineers in Congress. There are a lot of lawyers. There are a lot of people that don't really have any experience in technology, or much experience in regular work, but certainly not in the technology sphere. And thinking they're going to, aggressively adopt anything. I think, honestly, I think the China thing plays into it better than anything else. I think they'll see it as, well, we have to catch up with them, even though they have no idea of what they're catching up with. Yeah. I think that will, to me, if China actually launches a central bank digital currency, that will probably spur more people on than anything else. Just this sense of competition. Well, we can't let them get ahead of us, even though they don't know what ahead is or what this is to a large extent. But I think the same thing, and I think in Europe, we're seeing the same thing out of the EU. I think the research that is going on there and kind of some of the experiments that are going on there, obviously you have multiple countries involved, but it seems to be ahead of where we are here in the States. I would say if I had to rank them right now, China would be number one. Probably the EU would be number 2, and then the United States would fall into to third or maybe even fourth after a couple of other countries that are experimenting with this. And I think one of the reasons is because we don't have a lot of lawmakers who are scientists. We don't have a lot of lawmakers who understand kind of the benefits and can ask the questions that you are. As far as like the concentration and things like that, I don't really at the Fed, I don't worry about that too much because we've tacitly done that anyway. I mean, the top 4 banks in the country control what, 80% of the assets, 70% of the assets, something like that. And we have 6,000 banks in the United States. So we've already concentrated all the assets. So I think that's kind of gone out the window a little bit.
Yeah. Well, that's right. I mean, a couple sort of points to add to that, Jimmy, because, listen, I don't want people to think that, we have a Congress just completely full of Luddites, despite appearances. So one, there has been a congressional blockchain caucus that has been around for a while. So, I mean, at least I would say 5 years at this point.
Probably.
So, now, listen, their motivations, I don't want to impugn them. Certainly, I'm sure there are some campaign contributions associated with being on that caucus, but I think it's people who are generally just curious and think that, blockchain, provides economic efficiencies. There's a new senator from Wyoming, Cynthia Lummis, who is like, she is Miss Laser Eyes when it comes to cryptocurrency. And so she is very, very tuned to what's going on in this space and a great advocate. And I'm not saying that's necessarily a good or a bad thing. And, there was back in the CARES Act, so people might not remember, but the CARES Act was sort of the first round of stimulus. Maybe it's actually the second, I think, with COVID when it broke out last March. And one of the earlier drafts had in it a provision for Fed digital wallets to administer the stimulus. So I think there is widespread recognition, especially on the left and people concerned about inequality, that our existing payment system is just not cutting it. It exacerbates inequality for a variety of reasons. We can get into it. And that there needs to be improvement. Now, like I said, the question is, well, whether that improvement is CBDC or just speeding up interbank settlement. So, so have hope, for those of you out there who are sort of pro blockchain and look with despair to our Congress, because there are some people I think that are getting it.
Yeah. I think it was very telling that while in the United States we talked about distributing the relief via digital means, Brazil actually was able to do it, and they allow people to opt in, right? And a large portion of people decided to opt in, and that's someplace that's usually, I mean, it's certainly a developed country, but I think access and things like that have always been a question in Brazil, and yet they had a majority of people that did that. I mean, to me, it seems like if you wanted to really address things like access to banking in the United States, well, there's a simple way to do it, right? Allow everybody to have a digital wallet. It can't be any easier. Instead of I don't know how many checks they ended up sending out, 100 million checks or something like that. Yeah. Instead of sending out one check, put it in everybody's digital wallet. I mean, it would have made it so much easier to distribute it, to get things out there in front of people. But there seems to be this huge reluctance, and I think that comes from while there was that effort in Congress, I think that so many people are still behind the curve in when that comes up. As you said, in China, well, in Southeast Asia in particular, I mean, having electronic payment, and it's not constrained to people who are in their 20s and 30s. It's people in their 70s and 80s are using digital payments too. If they can do it there, they can do it every place. So yeah. This idea, well, they just can't learn it. That's insane, right? I think they don't give people very much credit.
Yeah, I agree with you. But the problem here in the U.S. is that we're addicted to our credit card rewards, our airline miles and our cash back. I mean, that's the truth. And this gets to the point that I made earlier, where that system exacerbates inequality because, how do we get those points? How do we get those rewards? Well, they're charged, the merchants are charged fees. And because they're charged fees, that increases the prices, of course, right? They need to recoup that. And we all have to pay the same price, no matter the purchase method that we choose, so that you can't price discriminate based upon payment method. And this was a Supreme Court case from a few years ago around Amex. So, I'm sure a lot of folks have gone to a store or a restaurant and they'll accept Visa and MasterCard, but they say, sorry, we don't accept Amex. Well, why is that? It's because Amex charges a higher swipe fee. And so many stores just refuse to take Amex. But the problem is that, for the lower income folks who can't qualify for these generous rewards cards, they have to pay the same prices. So in effect, they're subsidizing our rewards. And it's very hard for people to give up that. If you go to a QR-based system or CBDC, it's like, well, do I get airline miles? So there are a lot of there's a lot of things in life. There's inertia and sort of just kind of entrenched preferences that are going to be hard to overcome. And if China, like I said, they just completely bypassed the whole card-based system. The whole country, from no internet to everyone had internet within 10 years.
Well, that's another thing is the internet service here is that to me that's basic infrastructure, but apparently I'm in the minority because they don't want to fund things like that kind of infrastructure in the U.S. Certainly, if they can do it in a country the size of China, geographically speaking, they could do that here. But we have yet to do that. It's interesting you brought
it. It's in the bill. It will be in the infrastructure bill, though.
I saw
universal broadband, baby.
Yeah, I hope so. Hopefully it's not one of those projects like the BQE where 3 generations have been working on it and it's still not done.
Yeah, or the big dig in Boston.
It's interesting you brought up credit cards though, because you saw this past week. Obviously, big news was on Visa, right? Visa did the first transaction on Ethereum. And so, I mean, is it just a play to remain, a player in that space, or do they really want to make advances? What do you think? I mean, I have my own view, but what do you think?
I don't want to talk much on this because I actually really want to hear your thoughts, and I had this on my agenda for today because I'm actually not quite sure from a technology standpoint what is going on, because Visa says that they're allowing cryptocurrency to settle on its network, and I'm not exactly sure what that means, but I'll sort of start with the high level view and then I'll let you fill in the details. The same question was asked with Libra. And so if you remember a few years ago when Facebook, announced Libra, they created this sort of Libra association to govern it. And Visa and MasterCard were both initial members of the Libra association. And that naturally led to, questions. Well, why, wouldn't this sort of cannibalize their business if it takes off? I mean, why would they do this? And, the answer I think is quite simple, which is, sort of keep, the old adage, keep your friends closer, your enemies closer, right? If stable coins and crypto are going to be the future of payments, wouldn't you rather have a front row seat than a back row seat if you're Visa and MasterCard? And I certainly think that's probably what's going on here, but I'm curious to hear your thoughts, Jimmy, about how it's actually working.
I'm with you 100%. I mean, they're using USDC, which is a stable coin based on the US dollar. So they're allowing people to settle transactions in USDC, but they're using the Ethereum network. So obviously USDC is a stable coin. It's not going to, it's $1. It's always going to be $1. But Ethereum, it pumped it up, the price up significantly. It, for the first time, I guess, went up over 2,000. I think it was up 2,100 or something like that. It's up like 3 times in this year, but you are starting to see that kind of usage come out. And so I agree with you. I think they have to remain relevant. And if there's anything that might impede on that, they have to be there. I do think it's interesting that they chose USDC, a stable coin, as their, the first currency they were going to use. And so that makes it a little bit easier for them, right? Because they know it's always going to be $1. It's like a money market fund. It's always going to be $1. It's going to make it much simpler to do any kind of transaction. It's one for one. It's the the currency they report in, and they do all their accounting in. So it makes it, I think, a much easier transition for them. But it is and that's a logical first step, but it does seem like a first step. I mean, we're already seeing companies that are allowing you to use the Visa network and the MasterCard network as a kind of a debit against your cryptocurrency account, so that you can, go in any place that takes a credit card. You can basically use, these cards, but they're not credit cards, they're debit cards, and they're debiting your cryptocurrency account. So it is, I think, an interesting way to to progress. As far as the technology and things like that, it's pretty simple right now. I mean, they're not doing that much. It'll be interesting to see if they get busy, how they'll do it, because they won't be able to use the public network. One, if anybody who's used Ethereum lately knows, the fees are getting to be kind of outrageous. And so if you think swipe fees are high, that's nothing. Try doing something on the Ethereum network. Yeah, the gas fees are really high. So I think they'll have to, use some kind of compression technology, or maybe start running their own chains, or, somehow influence that, because I think right now it's a little bit of a gimmick, because there's just no way to move forward with those kinds of gas fees. But I would agree. I don't know if it takes the place of a Libra, because it is US dollar based. And so since it is US dollar based, is it going to be any easier to pay my suppliers in Vietnam in that? I don't know. I think probably not. I mean, most people in the world will take US dollars in payment, but I think it's certainly not a global currency. It can be, it can be virtual. It's virtual and it can be used globally, but that doesn't mean it's going to be accepted globally.
Sure. Yeah. So Jimmy, how would it work then? Like if you're actually someone who wants to pay with, I guess in this case, USDC. So there has to be some, issuing, merchant or bank, or it could be Gemini, I guess. Let's just say it's like, the Gemini Visa.
Right.
So I would just have to have USDC in my Gemini account, or like, how would that,
I would think
I actually be able to pay?
I would think I could just send it in from my wallet. So in my wallet, I have USDC, and whoever the receiving bank is, I would just have their wallet address, and just send a payment over, just like I would now, just like an electronic payment, regular bill pay. I mean, it's just bill pay with, but instead of a bank routing number, you would use a wallet address that was the bank's wallet, and I would just send it over that way. So it would just be like sending, I would think, anything else. I mean, but again, you're going to incur those, you're going to incur fees, unless it's on some kind of a permission network or private network or something along those lines. So while I think it's great that they're doing it on Ethereum, and caveat here, I do own Ethereum, but
so do I.
Yeah, I think we all do. But I don't know that that's sustainable in the long run if they can't get this underway. But it does bring up a good point. I mean, not only are we seeing those kinds of transactions take place in some places as big as Visa, which is, I guess, the largest card, out of Visa, MasterCard, but with that kind of usage, that kind of exposure worldwide, that could get traction, I think, fairly quickly.
I think so. And also last week, as I'm sure you saw, Jimmy, PayPal launched their checkout with crypto feature as well. So now when you go to on a website to pay with crypto, or to pay with PayPal, you can pay with your cryptocurrency as well. So I mean, there's certainly a trend, as I've discussed and written about in the past. There used to be a pretty well-defined boundary between the crypto sector and sort of the legacy financial system. That barrier is quickly eroding. I think pretty soon it'll sort of be indistinguishable, to be honest with you. I have some concerns personally about that, but that is certainly the trend. And the question is, for these companies like Visa, PayPal, now Tesla is allowing you to buy a Tesla with Bitcoin. Is this sort of like kind of like a form of like virtue signaling? Like, how much is this actually like genuine business strategy, or how much of this is just sort of designed to, let your customers know that you're sort of hip and with it, and in on the, I don't want to say in on the joke, but you kind of get it. Because going back to a point that I've made repeatedly, Jimmy, is, as it stands, cryptocurrency outside of stable coins are far too volatile to actually be used as a medium of exchange. I mean, if you're a merchant, why would you accept Ether? Why would you accept Bitcoin with, by the end of the day, it could go down 10% or more. And then, as you alluded to, with the transaction fees and Bitcoin's case, and the gas fees and Ethereum's case, it's just really not economical to actually use this as a medium exchange. So I kind of struggle with, how much of this is like foreshadowing things to come and sort of crypto, becoming mainstream, and how much of this is just sort of signaling to the it crowd.
Yeah, I mean, it's a great question. It's probably a little of both, I would think. I do think that, getting a first jump is always important. I mean, honestly, I think when we see Amazon start to take cryptocurrency, that's when we know this is for real. That's, to me, PayPal is one thing, but a global merchant like Amazon is something else. And if we start seeing Amazon do that, I would think, we talked about before, one of the things that I think is still, really nascent is a way to hedge yourself, and that's when we start having, I think, more standardization and structure around hedges, options and futures of cryptocurrency. We'll take a lot of the volatility out immediately, and then we will, then I think some of those arguments kind of go away a little bit. Mm-hmm. But that's what I'm waiting for is, somebody like Amazon to come out, maybe Alipay, and say, okay, we're taking cryptocurrency now as payment, and it'll probably be the top 5 or top 3, or maybe just, maybe it'll just be stable coins. I don't know. But I think once we see that, then we know, okay, this is locked in. This is happening. And so is it a fad thing? Probably to a little bit of an extent, I think it is, but I also think it's that need to stay relevant. And if a lot of your customers, all of a sudden you're seeing more and more people getting involved in cryptocurrencies. JP Morgan's coming out and saying, yeah, it is an asset class. Yeah, it should be part of your investments. Some of the other, JP Morgan Chase has their own cryptocurrency. Mm-hmm. They've been, that's even hard to characterize how JP Morgan's been, kind of the thought process there. But certainly they've put a lot of effort into that, the partnership that they had with Consensus and things like that. So to me, that we're going down that path as we start to say, more and more people are getting involved in it. We are going to see an ETF, absolutely no doubt, within, I would say, the next 6 months, where we are going to have a cryptocurrency ETF. Hopefully we get a burgeoning, derivatives market. And to me, that all of a sudden will take things out. As I mentioned before, when the US dollar came off the gold standard, I mean, that was the big fear, is now this thing has no basis, that it's going to be massively volatile. And we developed a futures market, a derivatives market really, really quickly. So and I think the papers from the early 70s that came out kind of around that were, to me, the Milton Friedman papers. Although I don't, tout Milton Friedman a lot, the papers that he had on that were pretty good, and I think they were very, they foresaw exactly what happened is, that would basically allow people to start using it in a very different way, companies and things like that. When they can start hedging out that risk, that's, that's what we need to do.
Well, we'll have lots to talk about, I guess, when we pick these conversations up in the fall.
I guess so. No, thanks very much. I don't know if there are any questions, but happy to answer anything. I don't know, Bridget, you're getting ready to start using your crypto credit card?
We'll see. I do like my credit card points.
See, that's what I'm talking about.
People do seem to like those.
Yeah. Do we have any questions from the audience, or any questions from previous YouTube videos, you know, my sister texted me the other day and she said, you're on, you know, as a question, she's like, you're on YouTube now? And I was like, I guess, I don't know.
Yeah,
Like,
yeah, we do
maybe
have
she
our
saw
own.
this. I don't know.
We do have our own YouTube channel out there, which is kind of cool for this, and we'll be using it for FinTech in the fall for some other things. But I mean, one of the, you know, it seems like the kind of the constant question is, you know, what's the what's the currency, or what's the what's the network that's going to win out? We don't know. I don't, and I don't know. I kind of think that we probably won't have a currency or a network. My thought is, we probably have a selection, like a lot of other things. I don't think we get a global currency. I may be wrong. Maybe it ends up being like, you know, some of the payment systems, like you say, you know, right now in China you have WeChat and Alipay, and you know, those, it seems to have concentrated down very quickly. You know, here in the States we have a few more, but it's not near as prolific as it is in other places. So we haven't gotten to that point yet.
Yeah, it's fascinating when you go on CoinMarketCap and, you know, they list like the number of coins out there, and it's like, you know, north of like 2,000. I haven't checked in a while. It's probably like 3,000 now. Do we need that many? Of course not. But I think it's a sign of the times that we're in. And it's sort of the thousand flowers bloom philosophy, right? I mean, you know, as I tell my students, you know, because I teach law students, so, you know, I try to be, you know, very level-headed about everything. And generally refrain from making bold predictions, because I think, you know, in the crypto space, history has proven that bold predictions tend to be wrong. But at the same time, it doesn't get you too many, you know, Twitter impressions or followers or whatnot either. So you have to live with that. But I say, you know, listen, think of it as kind of the .com bubble, right? You know, there was a lot of fraud, you know, a lot of fraud. You know, you had your pets.com, you know, the classic example, things like that. And of course, it didn't mean that, you know, the internet was like useless, right? I mean, we're still kind of figuring out like what is going to be sort of the long-term value add here. How is the space going to evolve? And I feel like that's kind of where we're at with blockchain and crypto assets. A lot of the stuff is, you know, is going to be like, will Dogecoin be around 5 years from now? I think I'm fairly confident saying probably not. But some of these innovations certainly will be around and will have evolved, and I think will be more noticeable in people's lives. I mean, you know, that's the thing is like, you know, before we went live, Jimmy, you're talking about going to visit your family over the Easter break in South Carolina, or sounds like a little more rural, I guess, rustic than you. I don't know how to put it. You know, and, you know, I come from a you know, similar kind of blue collar background in Minnesota. And, you know, when I talk to my friends and family, I mean, crypto is not a part of their life in any shape or form at this point. You know, like obviously most people have heard about it, but they've never used it. It's never come up in like their work. Like it's just not something that's prevalent. And I think you kind of lose that perspective, like when you're in the space full time, because there's just so much hype.
Right.
And it is important, I think, you know, no matter where you are, to kind of, you know, take a step back and talk to people who, you know, are involved in the same things, maybe don't think like you too. So, but I do think that might change. I think certainly in like 5 to 10 years, you know, we all might be impacted by crypto assets and blockchain in some capacity.
Renchen, did you have a question for us?
Yeah, I'm Renchen Huang, and you can call me Vesper. Honestly, it's interesting to learn about your perspective of China's like recent digital currency, because I was born and raised in Beijing, China, for the first 18 years. So it's kind of honor and happy to learn your perspectives. And is it true that we use QR code like the countrywide, especially in Beijing? Yeah, so it's interesting. And from my perspective, I do think US did a very good job on a PayPal for paying the transaction fees for, like, for example, when I in New York, the metro subway just allowed me to use PayPal to access in the system. Yeah, so I'm really happy for that, because it's inconvenient to do without it. Yeah.
It is.
Well, and now you can use the QR code too you can use your phone to get
yeah.
You know, when I lived in New York, I mean, my apartment was like littered with Metro cards. You know, you'd go through your wallet, you'd have like 5 Metro cards. And so
yeah,
if you could have it on your phone, it'd make your life a lot easier.
Yeah, true. Because I was kind of nervous about how to like get a Metro card, and then my friends just told me you can just use PayPal and put the QR code, tap it there, and you can just access in.
Yeah, you remember that? All those yellow Metro cards? I
Yeah.
probably still have this. I still find those every once in a while. And I haven't lived in New York in 10 years, but I still find those around every once in a while. But I always carried one, with like $20 on it in my wallet, just in case something happened. I would always have a Metro card so I could get any place. That was crazy. Yeah, in Japan, they kind of have used something like that. Those clamshell ones, in Tokyo, that you reloaded all the time. You only had one, and you just reloaded all the time. And so that was, I guess, a little bit ahead of the time. Although they charge you for how far you went, and I never liked that. I always liked using the Metro card because they could go any place on, a couple of dollars. Now it's a little bit more, but it used to be like a couple of dollars. You could go as far as you wanted.
But yeah, she makes a good point, Jimmy, too, because one of the things that I've heard from students and others who have traveled to China is just how difficult it is for non-residents to actually pay for things. Now, I mean, these at this time, at least, are very sort of closed systems. And I certainly, and there's reasons for that, but I certainly don't think that's something we want to replicate here in the US as we, move forward.
Yeah, it's interesting you bring that up. One of my kids was in Thailand and Vietnam about a year and a half ago, right before all the COVID stuff broke loose. And they were saying that they had to use Alipay to pay for almost everything. Nobody wanted cash. If you didn't have Alipay, you were going to go hungry. They said people would take it, but very reluctantly. It was, everybody wanted just to get paid that way. And also if you don't have a phone with a removable SIM card, it was really hard to do because you have to be able to pay on that network. So it was very, for people coming from outside, it was difficult. Fortunately, there's a big population there, so I don't think they were too concerned about it. But yeah, I think you're right. I think those closed systems are somewhat limiting. But it will be interesting to see, I think, going forward. And as we kind of monitor what happens, now that China's doing this beta, and then they're letting people volunteer to be part of the beta rollout for this. I think that'll be really interesting to see what the perspective are. Absolutely no doubt we will have some students who will be part of the beta. So I'm really looking forward to that. I have a fair amount of students from China who are in the FinTech program who will be part of the program next year. So it'll be really interesting to see or to hear, what they're thinking about, or their friends that are in China, family members, things like that, of this new system and how it's working.
Yeah, I mean, I think in the initial trial, which was in 2 cities, and I'm drawing a blank on that city's name. I think Shenzhen was one, but they did like a sort of like a lottery where they actually would, you could enter and to be a trial participant, and then you would get a certain amount of the CBDC, which is, obviously a brilliant, nudge, to borrow a term from economics there, to get people to participate. Jimmy, before we go, just curious, you mentioned the students you have coming from China for the FinTech program. Of course, it's a FinTech master's. It's not a crypto master's. Right. So I'd just be curious to hear, what are your students and applicants, interested in from a career standpoint? I mean, where do they see this degree taking them?
Yeah, that's a great question. I hear that quite often from students. So there's a distribution. I would say a number are interested in the payment space. Payment space is one that I see a lot. The blockchain space is one. Risk management across all of finance, risk management in payments, risk management in traditional finance. Quantitative risk management tools is very popular. So popular that we're actually going to have a new class in the spring on quantitative risk management. We're bringing that new one out. Some things that harken back to my past, algorithmic trading and quantitative trading is really popular. We expanded that. So we had a one class in that, and we've actually created a second class. So we have a basic and an advanced class where people are actually doing that in a production environment. So those are probably the big things. More quantitative product management and product design for more traditional, I would say, financial institutions, but doing more cutting edge applications in traditional financial institutions. So think of what, places like SoFi are doing, or Rocket Mortgage, or Ant Financial, but put it into a, Bank of America. So they're really interested in doing those kinds of applications. So it's fairly broad. It's all, I would say, much more technology oriented with a flavor of finance than the other way around. But people are coming from finance backgrounds. A lot of the students are coming from either they've worked at banks and those kinds of places, or they're coming with economics degrees and finance degrees. Still a lot with engineering and applied math and that kind of thing too. So it's a real mix. But it's that's kind of where the students are. They're very much at that crossroads of a little bit more technology, probably a little heavier on the technology side, but very heavily. And I think that one of the themes, there's a couple of themes that come up regularly, is more equity in financial in finance. That's a theme that comes up no matter where students are from. They could be from Columbia, they could be from Columbia, South Carolina, they could be from someplace in Asia, but that equity, it comes up quite often in kind of equitable distribution of financial services comes up quite often. And then I think the, kind of that next cutting edge, what's that next cutting edge of finance? Is it a new product? Is it a new type of offering? One of the things that I've brought up often is this idea where, you see a lot of robo-advising, and we have a class that's really popular on robo-advising, building those kinds of things. But we're not really talking about the other side of the spectrum, where, every place in the world is aging fairly quickly, aging faster than the natural rate, because there aren't as many young people, or young people are leaving, moving out of certain areas. And so the kind of the other end of the spectrum is that instead of accumulation of wealth, the decumulation of wealth. How do I spend this? How do I live off my retirement? We're not seeing as many products come out, that many services come out on that end of the spectrum, but that's where the growth really is. There's a lot more people turning, 65 every day in the United States than there are turning 18. And so it would seem like, and that's something I've been pushing a little bit more. We may have to design a class, kind of along those lines, or maybe have a second robo-advisor class that deals with that. But I see that as something that, and it's hard when you're 25 years old to think about retirement and what's going to happen. But if people kind of look at their grandparents and see the troubles, because I hear about those around the world, where older people are running out of money because they're just living so much longer than expected. It seems like there's a lot of opportunity kind of in that area, I think.
Yeah. Well, you gotta, I guess annuities ain't what they used to be, I suppose, right?
Yeah, annuities are not, it's hard to find annuities these days.
I know.
A lot of insurance companies got burned with annuities, when interest rates started falling, and they had promised these huge, guarantees, or what looked like huge guarantees. Back then they looked like nothing, but that 4% guaranteed for life, that's looking pretty good these days.
Right. Yeah, very good. It's so fascinating. I mean, it's like I never thought I'd hear like 20-year-olds be interested in like risk management, but crypto has turned a lot of things upside down, right? I mean, like
absolutely.
You talk to people as I'm sure Jimmy, who have been in payments like their whole career, and they're like, man, payments was a backwater. Everyone thought it was boring until about 10 years ago, and now it's now it's front and center, which is a good thing, because I think payments impacts us all in a variety of ways we don't really think about.
Yeah, the payments network, I think it has changed. I mean, what are you hearing from your law students? Do many of them have, I mean, obviously they're taking your classes, and your classes are squarely in the fintech space. Are you hearing a lot of them that want to go into that, or is it just more, I want to go into big law, but I need to have this perspective?
Yeah, it's more of the latter. There is a mix. I mean, of course, my situation is different than yours, because you're the fintech masters, right? So if you're applying and entering, you're presumably committed to a career path in fintech. Mine is just one class, 3-credit class within the law school. Some students just take it to scratch a curiosity itch. they've heard about Bitcoin, they've heard about FinTech, they kind of just want to learn more about it. Others are more sort of dedicated to technology and the law. So either they, want to go, into the startup space themselves or sort of advise, startups. Of course, there's just a tremendous amount of startups coming out of this area. And then others, are going to go the traditional sort of Duke Law graduate path of big law, where, big law is going to have clients, in the traditional banking sector as well as the FinTech space as well. And what's cool is that this is such a new area that I tell my students, like, you can, when you graduate here after taking this class, like, you will be sort of an immediate expert in this subject wherever you go, because it's so new. When I talk to people who are sort of practicing in this area, I mean, no one's starting, they sort of came from, transactional law,
yeah,
right? Or they used to have, they worked in, a legacy bank or something like that. So it's just a tremendous opportunity, and I always enjoy hearing from my students. I'm sure you do. Well, I don't know if you've graduated a class yet, but soon you will hear from graduates about the things that they're up to, and it's just it just really makes you proud, number one, and then it kind of gives what you do a little more meaning. Which I enjoy.
I agree. Maybe it's time to start exploring instead of the JD MBA, JD Master of Science in Engineering.
Yeah, maybe. Let's run it up the flagpole. It's above my pay grade, maybe not yours.
Probably above mine too. Hey, Bridget, thanks very much for doing this. This is always fun. I look forward to doing this again in the fall, and maybe, you never know, maybe we do one or two over the summer. We'll see what happens.
Thank you, Bridget.
Thank you both, and you can find the recording on YouTube.
Thanks very much. Have a good afternoon.
Take care, everyone.
Bye now.